Jerome Powell, the Fed chairman, said what everybody was expecting him to say. But there was a curveball he threw in the mix of all things, all right? And in the back of that, we have the boss, the chief of the biggest hedge fund in America, who actually said something which is quite interesting because he's pretty much saying, in other words, that if the short sellers are not smart, they will be crushed sooner rather than later. So let's dip exactly into what he said and why I think it makes more sense into why the price of AMC has been dipping so much lately without any significant justification or news behind it. Why? Let's get into it. First off, Ray Dalio. If you don't know him, he's a legend on Wall Street. This is the kind of people that whenever they speak, Wall Street tend to listen. He's also the chief of the Bridgewater investment firm, which is the biggest hedge fund in the US, if I'm not mistaken. I may be wrong on that, but don't quote me. So he's saying that there might be a US credit crunch, and this could tank the markets. But I don't want us to focus on the tank the market piece. I want to focus on the credit crunch, because the credit crunch is pretty much a tight spot when it comes to, borrowing money, lending money, and it has all to do with interest rates that are going up and up and up. American households and businesses could suffer a brutal credit crunch that slashes asset prices, he said. But I want us to focus on this. The flood of bonds into the open market could crowd out the supply and private debt, resulting in tighter credit conditions for consumers and companies. This is the company where I'm going to focus on. Since the amount of sold has to equal the amount bought, it seems like that it will happen via a big contraction in private credit, which will lead into financial assets and tighter conditions. All right. So let me kind of backtrack a little bit to put this in perspective in simple language. With the Federal Reserve increasing interest rates, we are now looking at maybe, 5% interest rate increase if we get into 2023. Nothing guaranteed because nobody knows exactly what the Fed is going to do. But what it creates in the lending or the credit world is that interest you pay to service your debt, to maintain your debt, is going to be higher and higher and higher. So when it comes to a credit crunch, it's going to push people like short sellers that are also in AMC, because since the beginning of this whole thing, the further we go in time, the deeper they also go, making sure that they go out of their way to maintain the price suppression. So it costs them money, not only because they need to double down, because the reality is retail investors, who, by the way, own more than almost 90 or 95% of the entire amount of shares floating in the market for AMC, they are not selling. As a matter of fact, they are still buying. All right. It's just that institutions have been selling because some of them came into this play to lend out shares. This has been one of the most profitable kind of side hustle business for, companies that have money on the side. And that's why we had, the BlackRock, the Vanguards. And recently they sold a bunch because of the market also dropping. All right. But on the other hand, people who actually own the actual company or the most amount of shares of the company, people like you and I, we have not sold, at least to last time I checked. Many may have sold because they over leveraged, because they didn't have those real diamond hands, but we're still holding because we know what is at stake here. We know what is going on behind the scenes, right? So Ray Dalio is saying, with the current environment, it's going to be tougher for people that are holding huge debt, which is the case for those short sellers, because interest rate makes it harder and harder. But the thing is, they are not even stopping yet. We don't know when it's going to stop. So there's going to come a time when, I don't care who and how big you are as a company is going to be just too much, because those institutions like the Vanguard, the BlackRock, as of last June, they reduced significantly the amount of shares they were owning. And I believe they were also lending some, if not all or majority of those shares. So on one hand, money is going to be a little more tighter. It's going to cost a lot more money and to service that debt for the short sellers. And on the other hand, you have less and less people willing to share those, to lend those shares for them to use against us. And one of their favorite stocks in the tech sector, the Facebook, the Apple, the Amazon, the Google, the PayPal, they are all dropping to new lows by the day as the market is dropping. So it means that even if they wanted to use that as collateral, it's also dropping in size, it's also dropping in value. And that brings us to this other theory here, which has been relayed on Twitter by this musical artist, Stephen Cooper. I don't know him personally, but what he said here makes perfect sense. I'll say again, they have no choice but to sell to each other, use synthetics and drive the price down, because that's the tactic they've been using in order to suppress the price down, praying to shake you out. They are trapped. Again, going back to this credit crunch and the current environment of the technology sector and the state of the current US market. If they cover, they're bankrupt. All right? Because you're losing on their position. If the margin call, they're also bankrupt, which I believe is going to happen if interest rates continue to increase, at least for some of them, creating that level or reaching that level where it's going to be just unbearable for everybody else, shorting AMC to continue to maintain those positions. And then if AMC get acquired by another company or merged with another company, is the same thing. All right. So I think they are pretty much doing this to kind of keep their position alive because they have no choice. And then they are only left with just one thing, hoping that you and I will sell. So it does make perfect sense, because why in the heck AMC would drop 20% in just 3 days? The company is doing way better than it used to be. So ask yourself this question. If nothing is happening in the company side with all of these other blockbusters movies coming out for Christmas and end of year holidays, company is sitting on a ton of cash, well, it doesn't make sense. So everything is just artificial. Everything is just a way to control the narrative, which is not the true reality. So when you look back at everything I just shared, it makes sense why now is the time to be even more bullish. That's at least what I'm thinking. I may be totally wrong because nobody knows what the future holds. But for now, I think I'm just going to continue to hold, because that's what I knew I needed to do in order for this to wait, and to wait for this to do what's supposed to do. But it doesn't make it easy, but at least, when you see in between the lines and you know what's actually going on in reality versus what they want us to believe, it makes more sense that now is the time to have those real diamond hands, because I don't think, we've seen the best into this short squeeze to happen yet.